It's September, and we have another market update for you. I'm David Shapiro with my colleague Lee Abraham. We run the Shapiro Group here in Austin, Texas, a local real estate team helping people buy and sell. If you have any questions about the Austin market, go ahead and comment below or reach out to us. You can shoot us a text or an email, whatever works best for you. So today we got a bunch to talk about. We have a Zillow article talking about how many people, despite us being in record low sales volumes, are actually looking at homes on their website. And it's a crazy high number I was surprised by. We've got a couple articles talking about Austin as a boom town again. So that's a change from the rhetoric that we've been hearing. So I'm interested to dive into the stats, see what we're seeing real time, and then also take a look at some of these articles and see what that's telling us about Austin. And maybe we've hit a bottom. I feel like I haven't seen these articles in 2 years. And now all of a sudden they're starting to pop up again. So is that a good sign for the future here in Austin? Articles that if you were around for the previous decade, leading up to 2022, it was like every month or two, there was an article like this popping up. So we'll look at those as well. Remember, you can always find us at therealestatevideohub.com. Let's go ahead and dive in. So we got a number of active listings to start. And you can see here, September, we're starting at about 3,400 listings, down from our recent all-time high of 4,000. You can see this goes all the way back to January of 2022 when interest rates were low and inventory was crazy low. And then when they started raising rates, came up, and we've kind of been in this cyclical thing here. And it's, well, if you look at this trend, it is starting to go every year by year slightly higher. But we're starting to come on the downside here.
Right. And so with the current number of active listings beginning the month of September, 3,398, we can parse that out into a monthly housing inventory using some different statistics. And so the number of pending sales, David, over the past 30 days, kind of in alignment with the more recent stats, 744 pending sales. So when we divide the 744 into the 3,398 active listings, we're looking at just under a 5-month inventory. So kind of making sense of the numbers here, the last 3-month average, 1-month average, 30-day pending, all significantly lower than the 12-month average. So we can kind of see some velocity picking up, even though one of the buzzwords we've been using in recent memory is anemic. Even though the number of sales are down, they're kind of up versus the average over the past year. So that's the numbers, and we're going to dig into some of the underlying statistics on what's actually happening to create that dynamic.
And here we show that 30-day housing inventory over time, similar cyclicality as the number of total listings, which is, interesting to see. And then number of sales per month. I think this has been the most interesting stat. And, here we're looking at the last 5 years. If you didn't see our video a month ago called Trend Lines Don't Lie, I would go back and check out that special report. It's really interesting. We look at this over like a 15-year period and how these numbers have changed and where we would be if we didn't have the pandemic. So very interesting. Go check out that video on our channel. But here you can see that year over year, we're up about 1.8%. So not a huge change, but really the big difference is when you go back to kind of pre-2020 even, but even looking at 2020, this is a huge discrepancy, 724 sales versus 1,200 or 1,100. So the volume, to the term you used, of anemic, this is where it's showing up as the number of sales.
Right. And so as we'll be reiterating, I think, throughout this report, is the pressure cooker that's kind of shaping up. We're going to look at some articles and some statistics about what's happening in Austin regarding economic growth, regarding population and things of that nature. And then we look at the historical number of sales dwindling down to where we're currently at. Pent-up demand is basically the underlying dynamic that we're going to be giving some guidance to our buyers, sellers, and investors a little bit later in this video.
All right, so let's talk about this first article. You found this one, Lee, so you want to talk about it?
Yeah, so this is a recent report from Lending Tree and Boomtown. It's a word we haven't heard lately regarding the Austin area, but basically they're saying that the GDP growth at just under 15% is a standout, and the third largest increase in housing units at 9.4. Population in Central Texas is up just over 5%. Yeah. So basically, the bottom line is that we're seeing growth, we're seeing health economically, and that is feeding into our thesis about timing the market, David. And so, that's a very precarious exercise trying to time the market, particularly if you're trying to be precise. And so, with the current dynamic of some of this economic information, and then also the political climate and dynamics regarding interest rates, political pressure to reduce the Fed funds rate, and then potentially subsequently a reduction in mortgage rates, it looks to me like the timing is good for some of our investor clients, particularly that are looking to undertake projects that may have a 1.5 year, timeline from inception to exit. And so, to me, just to kind of cut to the chase and spoiler alert, I do think that now is the time. I think the green light is lit to execute a project, whether it be a flip, a new build, something like that, that'll wrap up before the next election cycle. I think that the uncertainty that we have in the market now is a different type of uncertainty than what we had prior to the most recent election. And we'll talk a little bit more
And
about that,
you're
David.
talking about the next presidential election.
Correct.
All right, so we got 3.5 years until then, till we get the uncertainty back, and maybe that kicks in a
Right.
year or 10 months prior. So we've got like a 2 to 2.5 year window, something like that. And who knows? I mean, a lot can change in
Right.
the macroeconomic picture. Interest rates probably being the biggest thing. We've got Trump pushing to get interest rates lowered by the Fed, but my biggest concern is that even if the Fed lowers interest rates, that's the short term rate. If you're listening to any of the economic stuff, they talk about the Fed controls the short end, but the long end, that's controlled by the market. And so, how do they impact mortgage rates and yields at the long end, which is the 10-year treasury generally is impacting that if investors are spooked and they're still worried. So, it'll be interesting to see. If I had to call a bottom, I feel like I would call it now. All these articles coming out, prices and sellers just kind of capitulating to it to some extent. I saw a beautiful $4.1 million home. I had a buyer send it to me in, I think it was somewhere in '04, and it was at 4.1 million. This buyer sent it to me. Oh my gosh, love this house, a little bit higher than we want to spend. And then two other buyers sent it to me because they listed the same house at $900,000. And they're like, wait, is this real? And so they're putting it up for auction. They're trying new strategies. I don't know if there's no reserve price or what the deal is, but it's kind of people getting creative like that. Okay, well, they getting it's a builder and maybe hurting a little bit and just trying stuff. There's the lotteries. I don't know if you saw these going around, but there's a couple out in the hill country trying to auction, not auction, but do a lotto for their home. So you can buy, I forget how much it is. It's $10 or $100 for one ticket, and you get a chance to win it. So very interesting how creative people are getting. So could we be at the bottom? I think where me and you are coming to a similar conclusion that it's hard to time markets, but maybe if you were a betting person, this would be a good time to jump in.
Right.
Was this the same article?
Yeah. So this is basically just showing the areas that have the greatest growth or boomtown statistics. And, you can see Austin number one, and then Florida, I think, is five of the top 10. So you can kind of see that cluster down in the southeast.
Yeah. Some
And
Colorado, Tennessee. You know what I find interesting is I found a similar article, which I put next, and it's very similar, except for number two is different. I noticed that. So here's the one I found. And you see you have a cluster of stuff in Florida. You only have one in Colorado. This 8 cities is basically like the Phoenix metro area. Most of the towns and cities right there, Paradise, Tempe, I think they were all listed. We have Austin here. And so this was the map, and the colors just represent population. Everything's, there's no like +8 doesn't mean anything other than there's 8 cities in that cluster. But then you go to the list, and number one, Austin, number two, Sacramento. So similar to yours, Austin was number one. They're showing GDP growth of 51%. I don't know. Yours said what? GDP growth of 14.6. I don't know. Where do these numbers come from that they're so different? Business applications, 71%, median earnings up 33%.
I think that just generally speaking, when we're looking at national statistics, that they be taken with a grain of salt because there's a lot of different ways to calculate. To me, it's not so much the number, it's the direction. And
Yeah.
that's really my takeaway, is more of a directional indicator rather than some specific numerical reduction of the data.
Yeah, and I'll just mention some of these stats that stood out to me. 51% surge in gross domestic product, 12% increase in housing stock. One thing I want to say about this is if you already own in Austin and you're kind of, you fall just naturally into the NIMBY category of not in my backyard, like it's not in your benefit to see the housing stock increase and supply increase because that puts downward pressure on prices. And if you already own, you want prices to go up, but it is overall good for the economy to keep housing prices stable, low. And I know some people are thinking like, what? Austin's so expensive. But I've said this on previous calls. If you're comparing us to New York, where I was just texting with a friend yesterday, he's like, dude, I might have to move just because it's so hard to rent a place here. It's so expensive, not even buy. Places like the whole California coast. Anyways, there's lots of cities where it's way more expensive than Austin. We've done a really good job of increasing our housing stock compared to most cities, keeps pricing lower, allows more people to move here, allows people to stay here. And we've done a good job in comparison. Okay.
Mm-hmm.
33% median earnings increase, 71% jump in new business applications. That's cool to see. And the last sentence, while some cooling is evident in big tech hiring and housing demand, Austin's multi-sector growth makes it the undisputed leader. I've always said this about Austin. You have the state capital, right? In addition to tech, you have education, you have, UT, and there's other smaller universities. By the way, if you are not following the University of Austin, which is not the University of Texas at Austin, it's UATX. Get on their newsletter. What they're up to is really cool. And I highly recommend it. If you have somebody that's in high school thinking about applying, check out UATX. All right. And then our music, film, gaming. There's a lot going on with the film industry. There's actually like, I'm kind of in touch with a bunch of people in that. They're putting out studios in San Marcos. I know of two, and there's stuff other places. There's a big Texas film incentive that was just put into place to try to attract more film. So there's lots of stuff happening. And Austin, really good to see these articles starting to pop back up once again. So this to me feels like a bottom.
Mm-hmm.
All right. And back to our regular scheduled programming with the statistics. So here we've got the average sale price at 835 grand. Lee, what do you think?
Just stability is what jumps out at me. If you look at the last 2 months, David, comparing 24 to 25, last month, very little change. This month, very little change. So, yeah, it just seems like maybe the calm before the storm, perhaps the storm being a turnaround with sales volume. We talked before about demand being more nimble than supply. And so it's a lot easier for buyers to quickly jump into the market, create more scarcity, more out of balance sellers market where demand is outpacing supply. So to me, it's all that, which is basically saying that, again, this may well be the time if you're planning a project to dive in before prices jump.
Yeah, easier if you're doing a project, easier to get labor right now and get good deals on stuff. Contractors are willing to make bargains, whereas in 2021, man, they would just throw out crazy high prices, and you'd be like, "What? That much to just redo a bathroom?" I will point out the all-time high for an August was 2022 at 865,000, and at 835, we're 3.5% below that. So some
Hmm.
of these indicators, we've talked about the all-time high in May of 2022 and us being, 7, 8, 9% below that at times over the past couple months. I mean, we're really not that far off the all-time high. There's arguments you can make about selective selling. Anyways, we'll see. Once this market becomes more liquid and people don't feel locked in, I saw a stat that in an average year, there's 18% mobility. Like 18% of people are moving to, I don't know whether it's a new home, a new city, and now we're down to 8%. So it's a huge drop. It's not good in general for the country if you just can't move for a job opportunity or to be closer to your family or whatever the reason is that you want to move. So it's not good. You can see that the there's a lot of efforts to try to get interest rates lower, which is in most people's benefit. It makes things more affordable. And so I'm very curious. There's been a lot of sentiment swings. People are not feeling as optimistic about the economy. I wonder how much interest rates have to do with that. And that coming down could be beneficial in a number of ways.
Hmm. So days to sell up. And so this was I'm not going to say startling number, but it was a bit surprising to see that big jump month to month. It's traditional that between July and August, things are going to slow down just a bit. But this was a pretty big increase, David. So 37% increase compared to the previous month, 46 days to sell. Now we're at 63, generally in alignment with where we were last year, up about 10%. So, we like to keep an eye on this one, but this days to sell has been a little bit of an outlier compared to some of the other stats, a little bit of a contrarian number, and we'll keep an eye on it.
Hmm. And then the sales to list price ratio, 96.5%. It's just slowly ticking down. That's what we've been seeing.
Right. And so doesn't that tie into the notion that this may be at or near a bottom? And so as this begins to move, this has been the most nuanced and subtle statistic. Once this starts ticking up, I think it's the canary in the coal mine concept where it's a leading indicator as the market transitions.
Yeah, that's a good point. I mean, some people will look at this and say, well, can it just keep going lower? Yeah, yeah, I guess it could, right? I mean, obviously, you can see on this chart, we are now just at a quick glance. I see 1 month that's lower, which is October of last year, and that's probably seasonality. But pretty much, is this the second lowest number for this in the last 5 years? Interesting. Well, we will see.
Yeah. So as we look at the number of new listings, we're down both year over year, month to month, 919. So who is this good for? Well, the low number of new listings is good for sellers that are in the market, at least on the surface, fewer properties to compete against. However, you can make the argument that it just slows the market down because there's fewer buyers in relation to the listings and all that. So if you're in an equity position as an owner, supply is down, that's generally good for pricing, for values. Still like to see this jump up, but now that we're getting into approaching the fourth quarter, not really looking for much movement on this particular statistic.
Maybe a little bit of a window here if you're looking to sell with maybe some reduced competition in the fall before we get into the holidays. So
Yeah.
maybe if you don't want to wait until the spring when generally things pick up, maybe September, October is your opportunity to sell before things really slow down November, December over the holidays. And then next opportunity is sometimes it really picks up that second week of January. I've just seen it
Yeah.
kind of explode the second week. Sometimes it's not until February, but early into the new year, there's usually a nice little pop.
Yeah, one thing I'll mention, David, just anecdotally, is what we've seen with some of our luxury properties and buyers is that we've had a significant increase in activity on our Lake Austin listing, some other luxury listings. And so the fourth quarter seasonality, where the summer vacations, autumn trips are winding down, and some folks in the luxury market, it seems, are a little more settled into shopping. And
Yeah.
so, I
And
think that from the luxury standpoint, that the timing is real good, to your point about getting into the market with a listing that may have a little bit less competition and a little more demand in that particular segment of the market.
And I will say, if you're thinking of selling your luxury home, whether it's on Lake Austin or it's in Rollingwood, somewhere in Westlake, I mean, there's lots of parts of towns with luxury stuff, Tarrytown, Zilker. Anyways, the idea is October, November can be great months because you have so many people coming to ACL and especially F1. And so there can sometimes be somebody that's in town like, man, this place is awesome. I love F1. They might want to check out the Surf Ranch. By the way, if you don't know about the Surf Ranch, reach out to me. We'd be happy to chat about that. It's a pretty cool property. And then something on Lake Austin. So it's a good time to be on the market. You don't want to not be on the market if you're thinking of selling because you never know when the buyer for your home is going to come through.
Right.
All right, and then our listing inventory barometer. So if you're new to this is something that Lee came up to with. It's proprietary and it's the most real-time statistic that we have. Look at the 100% line here. And whenever this bar for the week, and so this is week by week going back a couple of years, is below, that means there's actually more sales than there were listings that hit the market for the week. And then if it's above the 100%, there's more listings for the week than sales. And so you can see the trend is generally over the last several years, there's been more listings hitting the market than sales. Now, this does not include withdrawals and expires, which we later added, and Lee will talk about that. So what are you seeing here, Lee?
Well, yeah, if you want to go ahead to the next slide that has the expired and withdrawn listings, it's just extending the data set. So the one thing that is particularly noteworthy, David, is the new listing column over there to the left. The middle of August, we had a couple of weeks where there were less than 200 new listings hitting the market and just over 200 in the most recent week. That is anemia personified, compared to the other data that we have on the chart here and previous to
Yeah.
that.
Yeah, you go up
So
here to April and May, there's 400 listings hitting the market a week. So interesting.
yeah, and so that's what's keeping us stable, is the supply side maintaining low levels. We've talked before, in my experience over the decades, where you truly have a declining market, where you have the G word, the glut of listings, and the horror of that dynamic. So as long as we're in a balance between the supply and demand, it could be worse. There's a lot of people in the industry that are in a depression mode, whether it's some of our lender partners or agents that haven't had the sales volume they need for their particular business. From an equity standpoint, though, we're looking at general stability. And the other thing to note here, you see all the way to the right, the net retraction or growth of number of listings. The expired and withdrawn listings over the past month have played a significant role on turning what looks like a growing inventory actually to a retraction in the inventory. So, whether it's 15 listings, fewer listings at the end of the week, 23, whatever it might be, it's just kind of the full story in terms of taking all of the various status into account as we look at the market.
So here it is once you take into account the expired and withdrawn. So you can see the chart looks a little bit different here with this one's maybe a little bit easier to see where the line is and the net growth or net retraction each week. And then another view of it, which I think is pretty interesting. Wow, we have a merge for the first
Yeah.
time since what is that? No, December of last year.
Yeah, to me, this is a very meaningful visualization of the data. It's easier to kind of interpret what's going on. And when you have supply and demand moving in tandem, I mean, you go back a couple of years, and just look at the alignment as listings were dropping, sales were dropping, and all that. And that's basically when we talk about stability on our report. Again, we're talking about equity and values and pricing, not necessarily sales volume. So this bodes well for equity, and it plays into the thesis that we may be at a bottom, and that the next 24 months for sure, at least from my view, look like a good time to say, you know what, there's always going to be uncertainty in our world, and it's probably going to continue with the pace with the internet and the overload of information that we have, international volatility and what have you. So if you're waiting for, the kumbaya global effect, that may be difficult. So I think that there's less uncertainty now than there has been and will be. And so I kind of like the window of the next couple years to do some planning and get some things done.
All right, mortgage rates. You want to talk about this, Lee?
Well, mortgage rates are a big topic, and they, for good reason, it directly impacts affordability. 6.5%. We believe that if we can get under 6, we're going to see a real significant impact on the demand side. We're down a little bit week over week. We're actually up a little bit from a year ago. 6.5. I like to tell the story. I bought my first house back in whatever that was, many years ago when interest rates dropped to 12%. I started in 82, rates were about 18%. And there's a couple underlying dynamics in terms of pricing and everything else. But when I look at 6%, 6.5%, it's a generally stable number. But if it does drop a little bit like we are anticipating, I think it's going to have a significant impact, David, on market sentiment and market volume.
Yeah. And the lower it goes, the bigger the impact. All right, let's talk about this article that I saw. I thought was super interesting. The housing market's frozen. Zillow CEO knows you're still scrolling. And each month, 230 unique, 230 million unique visitors. That is crazy. I Googled how many adults are there in the US, and it's about 260 million. So basically, if you're not scrolling Zillow or looking at homes online, whether or not you're in the process of buying one, you're in the minority. And so this is America's pastime. It's just looking at homes online. And friends send me stuff all the time, whether or not they're looking, like, oh, check out this one. It's interesting to see who's looking, who's paying attention. It turns out it's just everybody. So, um, and I found this so interesting in an era where we had the lowest number of sales that we have seen in a long, long time. That doesn't mean people aren't interested in homes. They would
Right.
love to buy a new home.
Right.
They would love to move or at least look at them. And in this article, he talks a little bit about how people they're educating themselves is kind of part of it. They're looking around, and then eventually they know when they're ready to pounce. And a couple other things that stood out in this article. Zillow said recently that any home put on the market also must be listed on Zillow within 24 hours or the listing would never be allowed on the site. So this is actually turned into a lawsuit between a large brokerage in the US and Zillow. And Zillow is fighting for what they're calling transparency, that, if you're a buyer, you want to be able to see it all. That's in your best interest. Our brokerage that we align with, eXp Realty, has taken that stance that, we're going to make sure that all buyers can see everything, and that our sellers are going to go on the MLS unless there's an extenuating circumstance, and there's times where it makes sense to not go on the MLS, but those are a case by case basis. But you have the choice as the seller what you want to do with us. But the default is, yeah, let's go on the MLS, let's go on Zillow, let's get the most eyeballs on these listings. And so it's interesting to see that there's this lawsuit between the large brokerage and Zillow over this issue. Another quote I thought was interesting: half of all buyers say they cry during the process of trying to buy a home. I don't think half of our buyers cry. And if they're doing it, they're not doing it on the phone with us.
Right.
But that's interesting. If you had a tough experience buying a home, you're not alone. I think that's a takeaway there. It's tough. It's like, I go through this all the time. Like, why do we have brokers involved in this? Because it's people's biggest asset. It's their home. There's a lot of emotions. They're doing it with a partner. The other people are selling something that's their biggest asset that they maybe have a sentimental attachment to. So there's just a lot going into these transactions. And so it doesn't surprise me that it gets, I mean, I see it get emotional. Not to the point of crying usually, but I'm not surprised to hear that there are people crying over during their home process.
Well, to me, it's a symptom of overloaded, people who are overloaded with information. And I think that creates expectations. It's the HGTV effect. Real estate is America's pastime, as you just pointed out. And to me, that's what's going on is that, back in the day, people relied on their real estate agent to even tell them what was listed for sale, let alone being able to shop online and have expectations of what kind of lifestyle they would like, the aspirational frustration of reality versus fantasy. And, it's a commentary on a much broader subject of how are people going through life in today's world, and how much of it is actually based on reality versus the perception of what reality should be. And that's a much bigger philosophical discussion. And I think that's got a lot to do with the emotional roller coaster that a lot of people are riding in today's world.
Yeah. If you find that topic interesting, because I don't think we have enough time to really dive into it here, reach out to Lee. When you're looking at homes, he'll be happy to talk to you about philosophy and everything he's seen in the real estate industry over the last 40 years. Lee has been an appraiser, owned an appraisal company. Did you own an inspection company too?
Yes, I did A1 inspections many decades ago.
In Arizona, I believe.
That was in Nevada.
Nevada. So he's done a lot in this industry. He's been an executive. So lots of interesting things to chat with him about when you're out looking at homes and talking about your listing, So um, well, I think it's super interesting to hear that people are getting that emotional. I would say I think we do a good job of shielding our clients and making sure we're helping guiding them in a way that it doesn't have to be emotional. We talked about this on calls with our clients, our core values, one of which is to have fun.
Right.
And this process of buying or selling can be stressful at times. We want to make it fun when we can and definitely keep it as little stress. We try to take as much of that off of our clients as possible. So, all right. Well, I think this was a good one. Got into a lot of different things. If you have questions, go ahead and comment below. Comments on any articles we talked about. We'd love to hear your thoughts. I'm always curious what everybody else is thinking on those different things. And if you want to chat with us more about real estate, you're thinking about buying or selling, even if it's a year away, feel free to reach out. If you got a lot out of this, go ahead and share it with a friend. Go ahead and subscribe so you can get updated. We've been doing these for 3 years, so pretty good on us for being consistent with this for so long.
I agree, David. And, the truth of it is that we've been doing this because we want to know what the facts are, and sharing that with our clients, whether it be in a transaction or on our reports, has been a really nice opportunity for us to communicate. So it's been a good run, and I think we're kind of just getting started.
Yeah. All right, everybody. Look forward to talking to you next month.
Thanks, everybody.